Hello, and thanks for joining us on this live webcast of the New School of Super. My name is Anne Fuchs, and I'm the Head of Advice and Retirement here at Sunsuper. 2 weeks ago, we came to you via this medium because of the extraordinary times we're in. We knew you were worried about COVID-19 and the impact it was having on your retirement savings. And a lot has happened over the last 2 weeks, which is why we're back again. Over 5,000 of you now have watched that webcast, and it's an incredibly effective way to get real-time information to you from real-life people to answer the questions that are keeping you awake at night. Now, normally on the New School of Super, our chief economist, my partner in crime, Brian Parker, would be here with me. But today, because of the gravity of the situation and times, we brought out the big guns, no offense, Brian. We have our chief economist, our chief executive officer, Bernard Riley, and our chief investment officer, Ian Patrick, dialing in on this class from their homes. And their role today is to answer the questions. Hundreds of you have been emailing us your questions about your super, and my job is to represent you, the members, and ask those questions. And our goal at the end of this webcast is that you have the answers to those questions, and so that you don't need to call us, because we know that there are many of you that are waiting up to 45 minutes to speak to a Sunsuper representative. And look, we apologise for that. We are doing everything within our power to resource our service area so that we can get to your queries as quickly and as professionally as possible. But we also want to say that, express our gratitude, I guess, and thank you for your patience when we do get to you. But we hope, as I said, that at the end of this webcast, you do have the answers and you don't need to call us. And I also want to remind you too that these answers and the information that you really need is on our website at www.sunsuper.com.au. Now, before we get underway, I want to also point out that this is just general information only. It's not taking into account your personal circumstances. We know many of you are wondering whether you should change your investment strategy, whether you should be moving to cash, and we strongly encourage you to seek personal financial advice before taking that action. Do not do that off the back of this webcast today. Speak to your financial advisor, or of course you can go to our website or contact us on 13 11 84. Now, for introductions, I've got Bernard Riley, our CEO, who's on the line, and Ian Patrick. Gentlemen, are you there? Give us a wave.
Good morning, Anne, and good morning to our members. Thanks for joining us.
My heart stopped for a minute there when I couldn't see you. This is the dangers of live broadcasting. So Bernard, so that's you smiling there. You've got that painting behind you for our viewers that haven't met Bernard Riley before.
Good morning, all. Thanks for joining us. And I just want to reiterate Anne's comments around thank you for your patience for those of you who have been trying to contact the call centre. To give you a little bit of context around what Anne was saying, we've had twice the number of calls on a daily basis from our members who obviously are concerned about what's happening in the markets, and they're also concerned about or interested to get some take from us around the changes that the government has been making around early release and around changes to pensions. So we're happy to help. The information is available on the website as well, and we thank you for your patience.
Excellent. Thank you, Bernard. Now, Ian, may I introduce you to our viewers?
Hi.
Where are you, Mr.
Hi, Anne.
Patrick?
How are you today?
Good day.
And it's good to have this opportunity to chat, particularly given markets are probably a little bit calmer than they were when Brian last engaged with you. But calm is a relative thing.
It is a relative thing. And I think actually we might start with you, Ian, if that's okay, around calm and sort of the jumpiness of markets and members calling us, and we've got an emailing us. And the first question actually that we've received is from Joan, but in fact, many of our members are asking the same question, which is why we've pulled out Joan's question, which she just wants to understand more about this current market situation and why it's jumping about so much.
Sure. And I think at its most basic, it's around uncertainty. And before I get to that, I think it's important to recognize that this is first and foremost a health crisis, and that the response of governments and others is primarily turned towards addressing the health crisis. But in so doing, large sections of the economy have been shut down. And when that part of the economy or vast extents of the economy are shut down, the markets become very uncertain about what the future is for earnings of companies, whether those companies will continue to exist, remain solvent and be able to trade at the end of the crisis. And markets react sharply to that level of uncertainty, and we've certainly seen that over the last month. Now, there's a saying in markets that goes something like, markets stop worrying when central banks and governments start worrying. And what we've seen recently is central banks and governments stepping up in a really big way to address the issues of liquidity in markets, the solvency of companies, and the shortfall of incomes of all the workers who will be impacted by these closures. And as these significant programs to address all these issues have come to the public's attention and to markets' attention, so markets are stabilized. Now, that's not to say they won't be volatile going forward. We're still looking at data coming out around employment that will be unemployment, that will be meaningfully higher than what we've become used to. We will see companies fail. We don't know which ones necessarily, but we will, and markets will respond to that. But for now, markets have taken the government and central bank initiatives and have seen a support for the fundamentals of everyday life and economies that is reassuring, and that's why markets are stabilized a little bit.
So, Ian, one of our members named Jared is asking the question, which I posed to you on his behalf. How does Sunsuper prepare our investment managers for an event like this?
It's a good question in that, as Jared is possibly aware, the vast majority of our investment management is outsourced to professional managers. And the way I think of it is they are investors just like we are and have to respond to emerging data in the same way that we do. People will have thought about shocks to markets, and investment managers, when we do due diligence on them, share with us how they have responded historically, because people will have been through crises before, and indicate how they would intend to respond to a crisis in the future. But that is never exactly the same playbook that we're dealing with at the moment in terms of a pandemic crisis. And so the way we guard against that as investors is to diversify our portfolio in terms of the types of assets we hold, the types of investment managers we employ, and ensure that the assets that they hold and the techniques that they use are diverse and hence likely to protect us in some of this uncertainty through diversity. It will never protect us against all the uncertainty. So can we prepare all the managers for a pandemic crisis like this? Not necessarily. Can we ensure through managing risk that we've mitigated some of the crowding of particular approaches or crowding of particular asset types that might be exposed? Yes, we certainly can, and that's what we seek to do.
So Belinda is asking around the role of unlisted assets and how they're performing, because I guess that feeds in really nicely to the importance of diversification and what role these assets play, which I guess, Belinda's obviously paying attention. So I might throw that one again to you, Ian.
Yeah, sure. So unlisted assets as a group typically include property that's unlisted, so not a listed property trust in the market. It includes infrastructure assets and private equity, which is unlisted equity, typically in smaller and medium-sized companies. And those unlisted assets are active in the economy. So they're not immune to the economic circumstances that we face. But what history tells us is that those unlisted assets don't appreciate in value to the same extent when markets get very buoyant and ahead of themselves. And so they haven't seen a run up in prices prior to a crisis, typically that you see in listed markets. And then in the downturn, they're not subject to that same fear that permeates listed markets, and they don't sell off near as much. And so as a consequence, whilst, as I said, they won't be immune to effects, they typically, through various crises in the past, have been shown to lose less value and perform with much less volatility through this crisis or any other crisis. So the unlisted assets have followed exactly that pattern in the crisis today. I think it would be fair to say the crisis isn't completely over, and it doesn't take much imagination to think an infrastructure asset like an airport is much more impacted in such an environment than, say, an infrastructure asset like an electricity transmission network. We're all going to continue. We're probably consuming more power in some ways doing these kinds of things. So the assets will differ in their response, but so far they've been performing in line with expectation. And the important thing is those diversifying characteristics that I spoke about earlier have been very important to the portfolio. The fact that they haven't fallen near as much as listed markets.
Bern, do you mind if I jump to you actually, just to carry on the sort of the conversation around unlisted assets? And Ian's spoken about things like electricity grids and airports, and these are things that are not easily sold. And so our Anna, a Sunsuper member, has asked, with all of these, so many members putting money into cash or now withdrawing it because of the under the rules of financial hardship in COVID-19, what is the solvency of Sunsuper? How are we going to pay out this money if it's invested in these long-term unlisted assets?
And Anna, thanks for the question. Firstly, I just unmuted myself, and this is one of the joys of doing something live. You may hear my next door neighbours mowing his lawn, and you may hear a dog barking. So I apologise if that's the case. I think the first thing to note is that this money's your money, and so no one else can get access to that. But what we do as an organisation, I'm quite confident with the solvency of our organisation. Firstly, let me say that up front. And there's a couple of reasons why I think that's the case. Firstly is that we have a reserve policy where we need to keep a certain amount of your funds as a group, a collective of all of the members, aside to help the fund run on an ongoing basis during periods of disruption and giving us the ability to make sure that we service our members on an appropriate basis. And we review that policy. It's required by law, but we review that policy on an annual basis. And in fact, the last time it was reviewed was at the board meeting just in December. So it's only been reviewed recently. In addition to that, the investment team have been focused very much on liquidity. And Ian can talk further on this if needed, but they're meeting on a daily basis. They've looked at the liquidity of our overall portfolio. And we've had some members have moved into cash already. I think just under, so we've had just a little bit over $1 billion of the $70-odd billion of your members, our members' money has moved into cash. So in percentage-wise, not a huge amount, a huge percentage, but a lot of money, $1 billion, has moved into cash. And the investment team have managed that very clearly, those requests to move into cash as they've come up, and there's been no issue associated with that. As we think about early release, and we've given that quite a bit of thought since the announcement, we feel very confident that should the requests come in from our members, we've got the actual liquidity, the cash, to be able to meet their needs. So I feel very comfortable and confident. And in fact, we've met with the regulators on a number of occasions in the last month or so and discussed this issue with them as well. So we feel very comfortable that we're in a strong position. The fund is in a strong position to weather both the turbulent markets that we're finding ourselves in and the call on liquidity that our members are asking us for.
I'm sure that's really good news for many of our members. Bern, thank you for answering that question. Wendy's also is asking a question to follow on around people moving to cash. Ian, I might throw back to you if that's okay. And Wendy's asking, am I better to leave my money in the default Sunsuper for life, or should I move to cash at this time? Now, I don't know what age Wendy is, because obviously the answer depends, I guess, too, doesn't it, Ian?
Yes, thanks, Anne, and thanks, Wendy. It does depend, and it typically goes to a question of investment horizon. Somebody quite close to retirement, and particularly if at the point of retirement they have a near-term need for a payment of some level, they'll obviously have a much different outlook to their and approach to their investment strategy than somebody who's 25. But typically, to put it very sort of bluntly, you take money out of listed markets today and put it into cash, and you crystallize whatever losses those listed markets have made. So if the share market's down 20% and you sell today, you're crystallizing a 20% loss. The reality is, if you leave that invested in the share market, and as many commentators have indicated, there's an expectation that economies will recover, and will recover, reasonably readily after COVID-19 has been brought under control. Then you still have that money invested in the market, and if it recovers all those losses, you're no worse off, so to speak, other than the worry that you've endured during that time. So I think a crisis like this is one of many that most members with a reasonable working lifetime and investment in super will face. And as a consequence, if you've got a long enough horizon and your investment strategy is designed to take you all the way through to that later stage of life, then remaining invested is an entirely appropriate thing. Markets do go through periods of crises. They do recover from those periods of crises, and remaining invested and not crystallizing losses has been shown time and time again to be an appropriate strategy. Now, having said that, within the life cycle strategy, which I think is what you referenced, Anne, in the question, we do de-risk that strategy as people move from age 55 through to 65. So we are taking care of some of that shortening of investment horizon naturally in the life cycle strategy anyway. So if you are in that latter stages of working life and you are worried, bear in mind that notwithstanding what I just said, we are de-risking periodically that strategy as it moves through that age band of 55 to 65.
And look, just thank you, Ian, and just an purely anecdotal insight from my perspective, that we are seeing those members who have a financial advisor are probably better equipped to handle the stress of riding this crisis out and not reacting quickly and switching to cash during a down market. But actually, there's a very astute member here called Jenna, and Jenna wants to ask you a question, Ian, about whether she should be making voluntary payments into super during these uncertain times, because she's probably worked out that there'd be some very high quality assets going cheaply at the moment.
Yeah, it is an astute question on the part of Jenna. And again, history would indicate when you buy assets more cheaply than they were yesterday, and which is what you referenced, Dan, you typically do better. There's a quote, and I'm probably going to mix it up, but there's a quote from Warren Buffett that goes, "The Buffett household celebrates when hamburgers become cheaper." We all love to buy our essentials cheaper than they were yesterday. Most things it works that way, but not with stocks. Why do people not want to buy stocks when they're cheaper like they buy hamburgers when they're cheaper? And I think that's where we should pause and think. There are assets today that, whilst they will take some time to get to their prior earnings power because of the wide-based hibernation, as we've come to know it now, of the economy, they are a lot cheaper today than they were 6 weeks ago. And therefore, putting capital to work means that you've got a bigger capital base for earning those future returns. And so it is an astute question. Again, it's entirely dependent on somebody's individual circumstances.
I think obviously the power of compounding interest, if Jenna is a young investor, cannot be understated, which is where I might throw to you, Bern, if that's okay, because Christine is asking, you know, how will taking the $10,000, Christine, I don't know if you're on the bad end of this COVID-19 crisis with your employment situation, but you obviously are thinking about whether you take the $10,000 out of your super and what impact that will have on your retirement savings. Bernard, did you want to answer that question for Christine, please?
Sure, thanks, Anne. Christine, great question. And again, without knowing your personal circumstances, it's hard to know whether you should be taking the $10,000 out or not. Again, but I will state, and as we've said earlier, I think these funds are your funds. And so if you need to call on these funds at this point in time, based upon the way that you need to go around that through going through MyGov, the MyGov website, and there's a certain requirement that you need to meet for that. So you need to have been, let me read it if I can, because there's a few, it's a little bit complicated. You firstly,
for our viewers, are you, Bernard?
I'm going to try not to. I'll be quick. You need to be unemployed. You need to be eligible for the job seeker youth allowance, parenting or farm household allowance. You need to be made redundant from the 1st of January this year. Your work hours need to have been reduced by 20% or more. And if you're a sole trader and running your own business, you need to have seen turnover reduced by 20% or more. So if you meet that criteria and you need access to those funds, then you should definitely go to the MyGov website to apply for that. And that's open shortly with funds being paid as soon as we can, once we get the advice directly from the ATO. They'll be advising us that individual members are eligible, and then as soon as we get that advice, we're then going to be paying it directly to members as quickly as we can. But if I go back to that question around should you or shouldn't you, I think the first thing I would be doing is I'd be seeking advice. And if you can seek advice, you can obviously call us up, or if you have your own advisor, as Anne mentioned earlier, I'd be seeking advice directly from them around the potential impacts. Because if we've modelled out some of the numbers, and you leave a lot of money on the table by actually withdrawing the money now, depending upon, again, that compounding that Anne mentioned, and your time to actually needing the money in the future, because it's there for your retirement. But again, if you need that to access that money now, that's the government have allowed you to do that, and you should take advantage of that.
Thank you. I certainly know I saw a number of 132,000 for a 25-year-old less at retirement, so it's not a small amount of money.
That's true.
If you can find, and this is certainly on the Sunsuper website too, we do have a list of all the other resources in terms of financial support if that is the last course of action you want to take, Christine. But thank you very much for asking that question. Now, I might actually, there's another question around the safety nets in place, and there has been talk, Bernard, about a lot of scammers and the like with this COVID-19, and what safety nets or safeguards we're putting in place to ensure that Sunsuper remains secure and our members' retirement savings are secure.
And great question. And during periods of stress, you often see an increase in scamming activity, and we know we've started to see, and we've heard reports of more of this in place now, which is really very concerning because at this time of stress, no one needs that additional amount of stress associated with that sort of activity. One of the things I think is important for all of our members to be aware is that we would never contact you directly and ask for your password to your accounts. We wouldn't ask for any of your personal information that's unprompted, in fact. So the way that we wouldn't call you directly. So if you call us and we're able to respond on there. So we really need to make sure when we do talk to a member that we're verifying their information. And so we've got a very strict protocol in place for us to be able to do that. And what actually we believe some of our practices are industry best practice, in fact, around protecting your money and protecting your information as well. and therefore we're doing what we need to do. But I think it's important from a member's perspective that you do what you need to do as well, and that's being vigilant around your own personal information. Again, so there's phishing activities and things you'll get on your phone and on your computer, on your email. You should always just, if you, Anne won't like me for saying this perhaps, but should you be in doubt, you should give us a call. And that will add to the volume of calls that we're already taking. And so I ask you to be patient with that. But if in doubt, please give us a call.
Thank you. Thank you, Bern. I might look, 2 final questions for you, if I might. We've got 5 minutes to go. I think some of our older members are wondering whether they can reduce their monthly pension, because obviously crystallising losses is not something people want to do. Some of our members are telling us they're trying to avoid it. So James is asking, he would like to know how he goes about reducing his monthly pension amount.
Thanks, Anne. And James, great question. And it's one that I think is very timely for a lot of those who are in the drawdown phase, in the pension phase of their superannuation. So firstly, the government has made changes, which I think is a great thing, because as Anne mentioned, you don't want to be drawing down on those assets unless you need to, and crystallising those losses, just as Ian was talking about earlier. And the same thing applies for those who are in the pension phase. So the government's announced a 50% reduction in the minimum. So if you think about that, so if you're in the 65 to 74 age group, prior to the change, you had to draw down a minimum of 5% of your balance. Post the change the government has put in place for the current financial year, so in 2019-20 and 2020-21, they've reduced that to 2.5%. And so for our members, what you can do for the remainder of this year, so there's only really a quarter left of this financial year, you can opt to reduce that to the minimum of the 50%. Any members who join us, for pension members who join us from tomorrow and elect to have the minimum, that will automatically be the 50%. And from the 1st of July this year, so for the next financial year, automatically it'll be reduced to the 50%. We'll happen automatically for our members.
Thanks, Ben. And I would encourage our members, if you're wanting to access, I'll reiterate a message from the last webcast. If you're wanting to access some money, particularly when you're in that drawdown phase quickly, please don't use snail mail. Please contact us via and interact with us via the member online portal, because we can process that in real time, get the transaction happening. If you can avoid using Australia Post for this type of thing, that would be fantastic, and come to us via MOL. Bern, one final question around the merger with Q Super, and we are getting a number of members calling us and asking about that, and in particular, Tim is wanting to know if the current climate has impacted the merger in any way.
Kim, thanks for the question. The merger with Q, we are still at the early stages, and I think we mentioned our communication. We're continuing to look at that. I suspect, given the current environment, our number one focus is on serving you as our members. So being able to deliver what we need to from the investment side, what we need to do as it relates to early release or answering your queries. So that's our number one priority. What that means is, I think, is that the discussions that we're having with Q Super will slow. They're still on the table. They're still something we're focused on, but it's not our number one focus. You're our number one focus. So therefore, I'd expect that it'll slow down. We'll be communicating with you as our members as that progresses, but I'd expect it to take a little bit longer than we'd originally talked about when we first announced it.
Okay, thank you, Bern. Ian, I might throw over to you now for any closing remarks from an investment perspective for our members. You're a man of many wise words, so I'm wondering if I can put you on the spot and see if you have any wise advice or words for our members watching today.
Thanks, Anne. And it's always hard to come up with the snapshot of reassuring comment at this time, but that is my objective, is to be reassuring. These markets have been challenging for anybody, and it's a known behavioural response that when uncertainty confronts us, we get very fearful. And what we shouldn't be fearful of now is the fact that governments and central banks have stepped up markedly in response to the crisis. And that has certainly provided a meaningful backstop to incomes of people who have been affected, solvency of companies, and that we will come through this. And markets will reflect that sooner than the stats will. And I'll give you a short example of that. Markets recovered after the global financial crisis, long before unemployment peaked. The stats on unemployment were 6 to 9 months after markets started the course of their recovery. And we will see that, and we will all look back on this and say, gee, it was tough, gee, it was volatile, but I'm glad I stayed the course. At least that's my lesson from history and my fervent belief.
Thank you very much, Ian. Very wise words. You didn't disappoint. Thank you. Now, Bernard, are you there, Bern?
Still here.
If you can, from your perspective as Chief Executive Officer of the greatest fund in the country, in my opinion, maybe I'm biased, what are your closing words for our members?
Thanks, Anne. I'd say stay in contact with us. We are doing our best to help serve you at this point in time. And I think at times when they are, as Anne touched on, I think at times when they're at their toughest, you need to look to organisations that you can rely on. And we're here to help as it relates to your superannuation investments and as it relates to those needs around early release, around changes to your pensions and the like. So we thank you for your trust that you've shown in us. We will, as Ian said, we'll all get through this. There'll be some challenges along the way, and there continue to be some more, I'm sure, going forward. But we feel, as an organisation, very confident in our position to be able to continue to help our members all the way through this. So thanks for your time today, and thank you for the support you've shown us.
Thank you, Bernard. So just to close out, my personal reflections, sort of the urgent business for our members that are thinking about what they do around their pension drawdown, you'll be able to modify that with us from tomorrow. And if you are thinking about whether you need to access your super under the COVID early release rules, please don't call us. We are having members calling us and having to wait 45 minutes to then be told they need to go to the MyGov website. And you can hear the sigh of just, oh no, not again. So if you can go to the MyGov website and from 20 April, that will be live for you to be able to do that. If you want to transact with us, please go to Member Online. Visit for more information about COVID. We will be keeping that website up to date as a source of truth. So www.sunsuper.com.au/COVID. So thank you very much to our members for your support. Thank you for joining us, and have a great rest of your day.